Let's kick off with Lumiras results. Earnings per share there falling by over 72% to 5 shillings 37 cents a share. Production over this period falling by 50 cents, and as I mentioned, that's way more than the Kenyan average of 16%. And this also at a time when tea prices have risen 8% this year. What has gone so wrong in the company?
Well, they really took a hit, especially because of the lower volumes that they experienced, because you find that while yes, the tea prices went up and mainly attributable also to the weaker shilling, turnover is basically composed of price by multiplied by volume. So with the lower volumes, then they took a 50% hit on their turnover figures. And this mainly attributable to the erratic weather conditions and also the poor rainfall that was experienced during the time. I think it's also an issue of how, where their farms are located, and they experienced worse climatic conditions than, say, the rest of their peers.
The company sits on prime real estate not far from Nairobi, and that's carried on the balance sheet as an historic acquisitive cost. Surely there needs to be some innovative thinking in order to bring this into the balance sheet and benefit from this, these assets that the company sits on.
Yes, I think they'll have to rethink their strategy going forward. It needs some new thinking in terms of how they can drive value for their shareholders and how they can position their assets to yield higher returns and thereby flow through their P&L.
The drought really, of course, has plagued production for tea producers and coffee producers. Is this a sector that you'd stay away from, given the fact that we've seen falling production and earnings?
Yes, definitely. Investors have to be more cautious because even as we speak, the rains just started about last week, but we don't know how consistent they'll be throughout the second half of the year. So I think it requires a lot of caution. And the producers themselves have also expressed pessimism in terms of the second half of the year.
Now, Access Kenya is a stock that has really taken a beating this year. It's the worst performing stock in the bourse, down more than 50% for 2011. That stock falling 0.8% yesterday. But the CEO of the company is saying that he sees massive full-year profit growth on the back of increased corporate earnings and increasing their corporate customers. Also saying that they'd be looking for a possible offer and a possible merger at around 18, 19 shillings. Now, that stock is far off from it, sitting at 6 shillings, 10 cents a share. What are your thoughts on the likes of Access Kenya and the optimism that the CEO has for the company?
Well, at times there's a disconnect between insiders and outsiders, whereby insiders would include management and the CEO, and outsiders being analysts, investors. I mean, what the CEO is communicating is that he expects growth in the stock, in the value of the company. But until that is achieved and until analysts and investors start seeing actually the direction that it's taking, then Access Kenya will continue taking a beating. It's currently trading at 6 shillings, and that has been the low over the past 12 months. Some may think of it as a buy, but they reported a loss in the last financial year. So until what the CEO is communicating is actually visible and tangible, we don't see any much change.
Now, we've seen a big sell-off in the likes of Safaricom, closing 1.5% lower yesterday, 3 shillings 35 cents. This takes the year-to-date loss to over 28%. Do you think the shareholders are punishing a company like this that leads in the data space, which is considered the new growth area in terms of earnings, and of course is the biggest telecoms company at this stage in Kenya?
Well, what Safaricom has been experiencing is a dominant foreign factor, because what mainly pushed the price upwards was a lot of foreign activity, And of course, with the troubles going on in the Eurozone, in the US, then most of these institutional investors are strained, say, for example, for liquidity, and they've really been exiting their positions in the stock.
So it's more a case of what's happening on the international scene as opposed to fundamentals for the company.
So, say that again? It's
more a case of the sell-off that we've seen on international markets and the stock like Safaricom being punished.
Yeah, it's more of what is happening in the international scene than an issue of fundamentals, because Safaricom is currently trading at earnings multiples of about 10, which is quite attractive.